Hello, morning. Thank you guys so much for joining. And if the past few years have been the ice age in on-chain trading, then the past couple of months have been the great thawing. We have seen shifts in regulatory arbitrage. We have seen shifts in the UX as well as value capture. So we got a lot to talk about today. But before we dive into that, we'd love to open up to a quick intro to each of the panelists so that we can all get to know you a little better.
Hey guys, my name is Anand Gomes. I'm a co-founder and CEO of Paradex. Paradex is a perp DEX on an L2, so we are our own app chain. We launched in February of this year. We do about 50 million a day, so still early days for us, and we're excited about speaking here today. Thank you.
Hey everyone, I'm Luke. I'm the founder and CEO of Variational. Variational, we're building a perp DEX as well for making any time series liquid and tradable. Our core focus is on permissionless listings, so day zero listings of things right when they're put onto an AMM, as well as novel types of products. So products like volatility markets, prediction markets, yield perps, etc. We're in testnet right now. We're looking to do mainnet in the coming few months, maybe sooner, maybe very soon. But we're excited to be here and share more about our vision.
Thanks, everyone. I'm Rachel, CEO and co-founders of Synfutures. Synfutures is a derivative protocol, like right now, consistently ranking top 3 in terms of volumes, ranking from about 500 million to 1 billion today, one day. And we brought into the industry to core innovation. Number one is exactly as what you mentioned, permissionless listing. So we enabled a feature about 2-3 years ago as the industry pioneer to enable single token listing for any perp pairs. And secondly, we are the only fully on-chain order book matching models. So unlike some of our peers who use a centralized servers for the order matchings, all of our transactions and matchings, liquidation, everything is done on-chain. And we are fortunate to be backed by like Polychain, Pantera, Dragonfly, among others. Thanks everyone for coming.
Yeah, guys, I think we're very lucky today with founders that are representing on-chain DEXs, day one listing, as well as one of the first movers on Blast and Base. So we're going to get a great variety of viewpoints here. I would like to start off by maybe tapping to the issue of value capture. So in V1, Uniswap, for example, had leaked a lot of value to the underlying consensus and settlement layers. And we have seen a shift towards more app layer value capture with Uniswap X, for example. Where do you think we are in this transition and potential sort of zero-sum game between the settlement layer and the DEXs layer?
In fact, I wouldn't call it a zero-sum game because the market will grow much more healthier if the pie is larger, right? So if the trading volumes comes up, and besides trading, there is lending, there's yield protocol, and many other innovation going on there. And if we could work together to enable more innovations and improve the transactions efficiency via the settlement layers, more people will come, and the whole values will grow. And this this is something that everyone is happy to see. And I would say that even until today, although the industry has been talking about the value capture parts and the fee parts, but we are at a very early stage of innovations, and it is not everyone's top one agendas to earn fees, I would say, for all the innovators, because we're aiming for the longer term.
Yeah, I'd echo part of that sentiment. I think it's a little bit of a fallacy to call certain parts of this a zero-sum game. A particular part of our design that we're interested in, welcome. A particular part of our design that we're interested in is community ownership of the protocol and community-driven incentives. And I think there's a number of trade-offs here, whether it's between the settlement layer and higher order parts of the application of the protocol. But for us, it's also between maker and taker. I think there's a lot of room to drive efficiency through essentially vertical integration of certain parts of the trading experience. So for us, we have a community open, essentially maker vault. So we can distribute gains from the maker side of the trade back to the community, as well as we're looking at some relatively novel mechanisms, such as loss refunds and a few others in that genre. I think when we think about settlement and clearing as part of a derivatives trading experience as well, we think that's actually a very interesting part. That's what led us down to this rabbit hole in the first place. Ed and I, our backgrounds come from the OTC trading side, where this was a big problem. I think when we design a protocol that has the right incentive alignments, it can make the right types of feedback cycles, and I think that's something that a few others have done relatively well recently. Hyperliquid's a good example with HLP driving a lot of community growth and interest in the protocol. So that's a model that I think we're looking to emulate.
Yeah, I don't have too much more to add to that, but I strongly agree with my panelists here that I don't think it's a zero-sum game at all. I think blockchains in many ways are like governments. You need like Singapore is a great example of good governance, strong legal framework, and in trying to reduce the cost of business. And if you do that, then businesses will grow and flourish, and so the pie will grow. So I think blockchains in many ways, it was very intentional on ETH's part to try and drive down gas fees, because then and make it almost like a utility. So I think of ETH as a utility that we can all build on, right? Without cheap power, we cannot manufacture anything. And I tend to think in those terms. I have an energy background, and so I'm kind of biased to thinking like that. But I do think that analogy makes sense. If you make the cost of doing business, including the inputs that go into the business, cheap, then businesses will flourish, and ultimately the pie will grow.
I really appreciate sort of pushing back and journeying with some of your differing viewpoints. I'd love to come back to, I think Lucas mentioned about vertically integrated applications, and both Rachel and Anand mentioned about the importance of UX so we can grow the pie. But Rand just joined us, so we'd love to open up for you to introduce yourself and tell us a little bit more about what Orderly does.
Sure. So I'm late. Rand, co-founder of Orderly Network. We believe in a future where anyone can trade anything from anywhere. So we are one shared order book by design across 7 different blockchains, going to be 8 end of the month. We focus on amassing liquidity for any assets through a variety of ways. Currently, mostly through market makers like Caladan, coding on the books. And then we have builders on top. We have 20 plus builders who are catering to their specific target audiences, retail, pros, traders from all over the world, different geos. And then that's kind of the ecosystem dynamic of Orderly. And we imagine a future where anything can be listed on Orderly, and anyone can use any front end to trade it using any blockchain. And the experience should be akin to a centralized exchange, where you're not dealing with wrapped assets, you don't have to use bridges, you're using native assets from any blockchain as collateral.
Thank you, Rand. This is a great segue to tap into that notion around UX and vertically integrated experience that we had just mentioned, because Orderly is a headless liquidity provider, if you will, and kind of leaving the UX part for the builders on top to figure it out. Where are we in terms of the evolution in on-chain trading UX, and where are we headed? And with a particular emphasis of potentially the integrated approach with CEXs and the more modular approach with DEXs. And I think this is a really good time to talk about this, given what had just been handed down by the CFTC onto Uniswap. So now we're learning, hey, maybe there are some externalities that are shaping how the on-chain trading UX would evolve. What do you guys think? Where are we headed? And
I can start. Ultimately, I think we like to think with this principle of working backwards, in the sense that what does the user want, and then you kind of work backwards from there. And if you think about that first, then users first and foremost want everything in one place, right? I'm not talking about market makers who are basically split across multiple exchanges because that's their business. But on average, your average consumer, even when you're shopping, for instance, I'd like to keep everything on Amazon or in the everything store, or at least that's the way we think about it. And so, ideally, I think we're all moving towards that one vision where you want to serve the user with basically whatever they want in the same place with seamless kind of interoperability and composability amongst everything, right? Because that's the least friction thing to do. And if you're reducing friction, you're generating value, and then you can get paid off that. So I tend to think that that's the end goal for everyone. Of course, there's practical limitations that you run into. For instance, you cannot do everything on chain as seamlessly these days because you run into gas constraints, and interoperability is not as developed as you want it to be. So rebundling services that already exist is still kind of hard, right? And you run into these problems. But ultimately, I think that's where we're going. That's definitely where we're going. Because the user, if you believe in this future where of self-sovereign money, where everybody's got money, it's on their wallet, then rather than asking the user to come to you, you should go to the user, right? Which means everything in theory should be available to them at that same level as the wallet. And so for that, you need kind of an integrated, fully integrated UX. But that's easier said than done. It's going to take us a long time, to get us there. And even the tech needs to kind of catch up to be able to do that. But ultimately, I think that's where we're going. And so, to answer your question, I think we're still early in the cycle. But given the pace of the development of tech in L1s, L2s, etc., I don't think we're that far off. Maybe a year, 2 years before we can offer really, really powerful, composable, and unified experiences to the user.
I'll add a few things here as well. I think seamless UX is something that we're certainly early days in. I think even just looking into the audience, those who are deep into DeFi, I think we would hesitate to call it seamless, at least at the current stage. But there's a lot of work that's being done there. Whether it's in integrating more things into one platform, whether it's on the wallet side, whether it's in bridges and gasless experiences, etc. But I'll actually take this in a relatively different direction, which is, I think one of the bigger promises of DeFi in terms of composability is providing functionalities that we can't find elsewhere, say on centralized exchange experiences like a Binance or something like that. I think there's a lot of work being done. I think there's a lot of great work being done to bring a Binance-like experience on chain. To have DEXs that have that level of like one click, that level of quick sign up, quick finality, good book performance, etc. But for us, we're interested in answering the question, what does DeFi enable that can't really be done necessarily too well on CeFi? And how can we use the composability of DeFi and just the flexibility of DeFi in order to offer products and instruments and other user experiences that can't be found elsewhere? So I think we're also in the early days of that. There's a lot that's being built. It sounds like even on this panel towards the view of perps on anything, permissionless listings, etc. I think that's directionally correct. At least where I foresee DeFi going. But as far as the user experience side, our driving ethos is how can we build seamless one-click user experiences that make these grand promises of DeFi, like novel types of products, novel listings, simple and liquid. And I think part of that's the technology side. And I think that was just alluded to. But part of it's also just a product design side. How do we think about not just how do we do better wallet integration and bridging and gas, but how do we vertically integrate and design the protocol in such a way that we can list so many different types of novel products. So that's what we're really interested in.
I think I have 2 points to make. The first one is that the inconvenient truth here is that I don't think DeFi's user experience will be matching that of CeFi in the very short term in terms of the traditional way, say like the speed, throughput, everything. I don't think so. We have to admit that. We have to admit that to see the true values of blockchains. And although, yes, I think during this cycle, we see breakthrough like great public chains, layer 2s, like improving the throughput and transaction speed. We see lots of the app, like including Synfutures, being putting lots of efforts to enable like seamless UX, one-click tradings. But that's the truth. See, for OP stacks, like one block takes 2 seconds confirmation. If you are familiar with centralized fixed like API, etc., it's like even millisecond is not enough speed, right? So in terms of speed, normal simplicity, etc., I don't think DeFi is going to rival CeFi in the near term, even with all those technical breakthrough. But my second point is this. UX is not only about these speeds, the seamless transactions. It includes many things else. For example, let's take the Web2 examples. I would love to ask the audience the questions. Do you think the photos on Instagram can match the qualities of National Geography? And would you rather like do you like how many times you spend on reading New York Times versus reading like Facebooks and other like sort of like decentralized media? Did you spend more time in like New York Times or those like classic book? No, right? So I think that's the same with DeFi. Yes, I mean, from the speed, from the quality, I mean, like for Instagram, it cannot match the centralized National Geography or others. But the beauty of it is decentralization. The beauty is that it enables the platform for everyone to contribute and everyone to provide the varieties of goods and products and contents and everything to services. Although the quality is not as good, but you provide something unique that suits to certain groups of people is dear and near to your heart. And that is the beauties of blockchain and DeFi. Yes, I think in terms of speed and others, it could not rival the centralized peers. But because of this like openness and the transparencies and this like low entry barrier, more people could come over here to contribute the liquidity, to contribute the product ideas, to contribute different like innovations of the financial products to make it accessible for everyone. And that's is what I see as the true advantages of blockchain and the true like advantage of DeFi over centralized peers. And that's something that we're also working towards with.
Thank you, Rachel. I think this is probably the first time I've ever heard of a comparison between on-chain liquidity providers to Instagram creators.
Yeah, I mean, like I started my career in like traditional fintech, and at that point, we spent lots of time arguing what is the good about using blockchain for cross-border remittance versus centralized. And the result is that, sorry, I mean, in terms of speed, because like sort of democracy is always lacking the efficiency compared to like dictatorship, right? But the good thing is that everyone, say if you remit from Hong Kong to Philippines, the Philippine people, whoever have the liquidity there, could provide their liquidities instantly without using centralized services to provide that, right? So that's the so by empowering blockchains and by utilizing blockchains, everyone will have the opportunity to provide their financial services, and everyone will be able to enjoy their special financial services from different like providers. I think that's the real values of blockchain. Yeah.
While we're on this topic, Rand, I would love to hear your thoughts on this, given your unique position of having potentially worked with like developers who took differentiated approaches to construct the front end. What have you seen that worked well? Where do you think we're going?
I think one, DeFi builders are very different than like KOLs and front ends who can attract traders. I think the mentality is quite different. Like the distribution of liquidity, that's kind of what DEXs are, right? To end traders, there's a gap between what builders think the users want and what they actually want. So then our thesis is that there's no one size fits all DEX, and we think there will be differentiation between user segments in the same way that Robinhood caters to a different audience than Interactive Brokers, than Goldman Sachs, right? But they all need the same liquidity infrastructure, which in TradFi is like the NASDAQ and the CMEs of the world. And that's kind of where we're approaching it from. I agree with Rachel, we need this permissionless liquidity layer where people are contributing liquidity and assets and listings and such. But I think the front ends are best left to the guys who really understand their users. And that's the trading communities, that's the KOLs. So our vision is to have anyone create a DEX in a matter of minutes, right? And they can use that because it's about trust, right? Why does a user go to your DEX or exchange to trade? It's the convenience, it's the product, but it's also who is telling them to do that, right? Which are the KOLs, the communities, it's the blockchains that they trust. And hence, we believe in a chain, like an omni-chain future, and the native assets from those blockchains. And hence, that's kind of our design. And I think that's, I mean, where do exchanges now get most of their volumes and flows, right? It's, I think, especially for futures, it's from KOLs, trading communities, aside from the professional guys, right, like the HFTs. So I think that's kind of our approach. Yeah.
If it's okay with everyone here, would love to maybe shift the focus of our discussion a little bit towards the regulatory landscape. So I think a couple of data points are interesting to reference here. First off, the CZ being handed 4 months and will be coming out soon. And I think that's sort of like a shelling point to recognition on CEX's getting a little bit more of legitimacy. And we're seeing the same thing happening. Well, the Wells notice is sort of becoming a badge of honor to wear. So nobody wishes to get it, but when you do, it sort of makes a statement about where you rank in the world of DEXs. And I think more interestingly is by paying off $175K to CFTC, it's sort of like a tacit acknowledgement that, okay, so it's okay to run spot exchange on chain, right? Because they're not getting penalized for that part of their business. So with these kind of like more recent events and shifts in regulatory landscape in mind, how do you view kind of the evolution of CEX and DEX in a compliant way going forward?
So I think there's only two ways left now, right? If you're a centralized exchange, I think you have no option but to go fully regulated, because because you have an entity, there's a business entity around it, etc., and regulators will come after you, which is partly why you're seeing all the top CeFi exchanges basically applying for a license, and pretty much wherever they can get one, they will. And in the jurisdictions where they're struggling, they're shutting it down. So OKX, Bybit, etc., have announced multiple times that they're shutting down in certain countries, and because they don't want that reg risk anymore, right? Because they're centralized. And so I think if you're down that path, then I think full regulation is kind of the solution for you, or the end game. But if you're down the DeFi path, I think DeFi builders can carve out a space, and you're already seeing this well-noticed stuff that you talked about. It's largely for sins that these people committed in the prior years, right? And people have kind of learned from that. So for instance, there's multiple things now projects can do to safeguard themselves from US securities laws. If you're doing an ICO, for instance, you can lock up your token for a year, make sure there's no flowback. There's a flowback rule that you can try to avoid. You can obviously block US people, do the TRM labs. There's all these like on-chain tools now that you can use to battle the sanctions. So it's definitely, I mean, there definitely is a space where you can carve out, for yourself as a DeFi builder, where you, as long as you don't trip, certain wires, I think you can exist. And then you can continue to build as long as the countries where you exist pre-decentralization allow you to do that. And then of course, once you're decentralized, then then of course then it's subject to governance, and then there's no central body and so on and so forth. So to me, it's quite clear that there's only these two paths, and companies like us have to kind of decide which path you want to go. I don't think you can be in between, because it's kind of then the worst of both worlds. And we've obviously picked that we want to go down the DeFi way.
I'll expand a little bit. agree with most of what was said there. I'll expand a little bit on using technology to be more compliant, and I think this dovetails or keys off nicely some of the earlier conversation, as well as like how do we improve UI UX and DeFi. But I think, for example, the idea of KYC passports, some of what Coinbase Wallet is attempting to do with Base. I think many of the monitoring tools, you mentioned, anti-VPN safeguards, but as well as, AML checks using wallet addresses and looking at on-chain flows. Many providers are working at this, in parallel. And I think it'll really be about the technology and the adaptation of technology to run, decentralized platforms in a compliant way or in a responsible way, I'd also say. So this is an interesting topic to me, and at least at Variational, we're always trying to stay abreast of any developments that are happening in this space, because at the end of the day, we want to run a responsible exchange. We want to play in DeFi. We want to achieve and work towards decentralization. But the goal here, I don't think, is always quite as adversarial with the regulators. I think we have to be responsible parties and look to integrate technology.
I think in general everybody wants to be responsible, right? The issue has been that there's no clarity on how to be responsible, because the regulators have not really told you, hey, do this or do that, and you're safe now. And so we've been kind of struggling in this, this like very ambiguous landscape, and that's made it really hard. So the best way to do that is to have to leave the US and go to a jurisdiction where they don't put you in jail, right? And so I think if not all, DeFi builders are well-meaning and they want to be compliant. It's just that we've been dealt a really bad hand from a regulatory perspective, right? But to your point, like I think most, if not all, DeFi projects now are doing some form of AML monitoring on the blockchain, blocking addresses that are OFAC sanctioned. We certainly do it, right? And I think most people, they might not talk about it, but I'm pretty sure they're doing it because nobody wants to hear from the CFTC or the SEC.
Yeah, great points, my fellow panelists. From my perspective, I think number one, even we are a DeFi protocol, we in fact welcome regulations. I think like some parts of right now we see the shortfalls of those compliance and regulations so troublesome, but a good thing about regulation is that it is not only about penalty, it's also about investors' protections, and it is also about welcoming the institutions to coming into the DeFi to help the industry growth. If you look at the history, say we should remember it is the industry themselves that require and request for regulator. For example, during like earlier financial crisis, there's no Fed, and JP Morgan has to step up to rescue the whole industry, right? And then with all those like lenders of last resorts, arrangement with lots of other like regulation arrangements, the industry become much more healthier. That's in fact a ask from the industry participant themselves to have good regulators safeguard the whole entire industry. But the second point I would love to make is that honestly, it's a closed door, right? We welcome regulations, but we would love to have the benefits of regulation as well. You can't tax me without doing anything. That's what I say. We pay the tax because the government offer utility. We pay the tax because they offer like they build the roads, they build the infrastructures for us. But I think like this is also a pressure on regulators as well, right? Meaningful regulation is essentials, and then we do like hope that the whole regulation space could really take the time to study the industries and help the industry to grow instead of just simple penalty. Yeah.
So there's a few types of exchanges now, right? Very regulated ones, centralized, Coinbase, Bithumb, local jurisdiction, no perps, right? They can't do perps. I think Japan they can, but very low leverage, like Bitflyer. And unregulated centralized exchanges, I just won't name who, but then they kind of are very loose on KYC, perps, solicit users from all over the place. Maybe not US, maybe some even US. And then there's DEXs, right? So I think the middle ground of these centralized exchanges that's servicing all types of geos are probably going to get replaced by DEXs in the longer run as the DEX improves and DEX is more decentralized. It's a much easier proposition to governments for that, given the transparency instead of like a rug pull risk or some, it's centralized entities, right? So I think that's kind of where the world is going, and we're going with that. And the hope is that the more decentralized you are, if you look at DYDX US team, US entity, they have a chain. They give all their fees to the validators, which is token holders. Very security-like, but yet they're okay. I mean, even though the founder has stepped down and such, but not sent to jail, right? So I think that's a direction we're looking at, right? As DeFi founders, I would say definitely focus on growth. Do not shoot yourself in the foot by trying to comply or be too sensitive about regulations too early, because ultimately we have to grow for them to even care, right? I think that's kind of my take on this. And when they say, okay, you guys are too big, you need to be more compliant, and just do it, right? I think the precedence is that has been okay for builders, even in CeFi. But I wouldn't be too scared of it. I think that still we need to find users and product market fit and grow as DeFi builders.
Really appreciate that. Building a business in crypto is hard enough, so why kind of tie your hands behind the back and run with that? And this is potentially one of the tips that I'm hoping in the last 5 minutes that we have on stage to share with the audience today, who many of whom are building in the space. So what are some of advice that you would give to the builders that are in the audience today?
Go for it. I think there's the space is so much uncertainty about basically everything. It's like nothing, you can take anything for granted because even trends are so short-lived. But I think the best way to learn and build is just jump off into the deep end. I think it's always worked for us. Every time we want to do something new, it always seems more daunting when you're thinking about it. But then once you jump in, you're like, yeah, with enough time and iteration, you figure stuff out, right? So I think there's this power of speed and moving fast and compounding and iteration that I think is very kind of undervalued, or people don't value it as much. But once you start doing it more and more, you just realize that you can, if once you set your mind to it, you can pretty much do whatever you want. So short of bending the laws of physics, right? But if it's within that, yeah, you can probably do it. So my advice would be go for it.
Anand, I completely agree with you. I'm not going to let you off the hook that easy. That was a soft one. So what you mentioned earlier was really interesting in terms of the protocol being decentralized in the last part, and then thinking through how to stay compliant as much as possible, or at least like working with PRM labs and making sure you're doing the proper AML and whatnot. How do you stay competitive in this space? Advancing your UX, just providing better products, becoming more integrated, as you so much advocated earlier. Once you decentralize, have a token, and have some of that decision-making power being handed over to the DAO, how do you navigate that?
I mean, it's hard. It's definitely not easy. All my fellow panelists here are great builders themselves. They understand the market, better than us in many ways. And but I think the thing that's like an anchoring principle for us has always been, to something you said earlier, which is offer something that people can't get anywhere else. And if you do that, and from a return perspective, at least in DeFi, because ultimately everybody's competing for TVL, right? And the TVL has to generate some return. And so our internal hurdle rate is 40%. If I can develop a product that generates 40% consistently, that's not kind of Ponzi and points and whatnot, but like real yield, TVL will come there. And so we use that in everything we do. So for example, we're about to just launch vaults next week, which is basically based on this principle that ultimately we want to attract this passive TVL, which there's so much off there in the market, but we don't just want to recreate hyperliquid vaults, right? Because people already have that. And so we've basically taken vaults and basically it's the evolution of vaults. So we call it on-chain portfolio management. So you can put perps and options and multi-collateral. You can do auto borrow and lending. But again, that's hard. It's a big, bold, ambitious vision. But again, I think ultimately it's offering something that people can't get anywhere that clears a hurdle rate for their capital. And if you do that consistently, then as a guiding principle, then I think, with enough experimentation, you will figure it out.
Oh, I'll go next. That's a tough one to follow. I think it's all very good advice. I'd rephrase two pieces there slightly, but I really would echo a lot of what was said. I think Brian Armstrong also used this phrasing recently, but it's a bias towards action. I'm a multi-time founder, and one thing that I've found is it's very, very easy, as Anand said, to build things that are very, very hard, like to get obsessed with the idea of, big picture, build things that are very hard. But at the end of the day, I think biasing towards action in a niche, a definable niche, one that's not currently well serviced by anything else in the market, like that's really where you have to start, right? At the end of the day, let's even talk about perp dexes and this idea of bringing Binance on chain. That's a huge goal, right? That's not even exactly where we want to compete. We're defining a subset of that. We're defining a subset of niche products and unique listings and things that can't really be found elsewhere. And that's where we said, hey, we're going to start here. And I think biasing towards action and being customer obsessed, right? Saying, okay, let's take that niche, let's build towards that, let's run some experiments, let's see, do people actually like trading prediction market perps, volatility perps? Do people want yield perps or hash rate perps and so on? Running experiments and gathering data is really the only way to iterate. So I think that's a rephrasing of what was just said, but biasing towards action and building and getting things out there, and whether it's in testnet or even in mainnet, and continuing to iterate from there, making sure to have a product in front of the user and get that real-time feedback. I think that's the biggest lesson that I've had, and I think that's imperative. I mean, when you're building a business, especially in a crowded space with many other sophisticated and fantastic founders, we really have to carve out that niche. And I think that's the reality across crypto. The great beauty of crypto is that anyone can be a builder. There's widespread access to APIs and SDKs and educational things, and I mean that's really the ethos of crypto is that anyone can be a builder. And that creates competitive markets, and it creates a huge number of things being tried at once. So my advice in short is bias towards action. Get out there and build, but build in a clear niche. And that's
I have another one, and don't care about what anybody says on Twitter. Because if you try to keep riding the hype train on whatever the latest thing is, like prediction markets is a thing now, so everybody's jumping on that. If you have a vision and you're sufficiently convinced, stick to that, because again, with enough time, all these tourists eventually will drop off, and eventually, like if you're building a real product, that will stick. So ultimately, that's what you want to achieve.
Build and get that community feedback. The community feedback is what matters, not Twitter.
Sure, my turn. In terms of advice, I would say that like recently when I communicate, when I talk to lots of peer founders and investors, I could sense like let's say frustrations among many of us. Frustration comes from builders, and why is it so hard to get funding and get new users? For investors, they're saying, hey, complain why like all the I didn't make as much like gain, even though it seems to be in a bull market, right? So the common sense of frustration is everywhere. So, but from the bottom of my heart, I do feel like many things in life is meaningless, but it's very rare for us to be able to be part of, let's say, once in a multi-generation chance to revolute, to live in the histories, to really change the whole industries towards a better future, right? So if it's so easy, then it wouldn't be called a once in a generation opportunities, and everyone could make it. So like any other industry, there's always a plateau out there, and there is the darkness before the dawn. So if there's any advice from me, that I hope that to all of us here to be optimistic, and stay focused, state building. I don't remember the exact wording of that, but I really like saying that pessimism always leads to, it's easier to lead to correctness. Pessimism leads to correctness, but it is optimism that leads to success. Yeah.
I think everyone covered a lot. I think we're so early in just DeFi, perps, everything. Like DeFi is like 3% of C5 perps volumes. Spot is like 15% maybe. I think 2 years, I think in 2 years, we're going to see something like a decentralized finance. We hope that it's going to be built on Orderly, but even if it's not, it's okay. I think that's where the future is going. As builders, please just build stuff, break things, iterate, and community feedback, leverage the community, make things permissionless. I think if you're like traders, users, try everything out, right? Try our products out, get feedback, see what you like. I think the whole goal is to iterate towards that decentralized finance, and even after, it's any asset, right? It's not just crypto assets, but anything on one platform or multiple platforms, and that's just better for everybody, right? Thank you.
Okay. So find your niche, stay positive, stay convicted, and by the way, turn off your Twitter like right now, and you're going to be good. Thank you so much for sharing your insights and experience with us today. Thank you, Caladan.
Thank you.
Thank you guys
you.
so much.
One announcement to make. We're throwing a really big party on Thursday. So if you guys want to break from all the boring parties this week, come meet us and we'll put you on the guest list.